do that as well. So just briefly, for those who are watching from the recording, we'll be talking about long positions and short positions and trading versus investing today. And let's get started. So the little definition, what it means here is if a long position is held, the stock is being held and has been purchased. So if an investor has actual long positions, this means the investor actually has bought those stocks and currently holds them. For example, if you own 200 shares of stock XYZ, then you are long 200 shares of XYZ. Long position is the purchase of a stock, bond, or a currency with your hoping that it will rise in value over time. An investor would like to take a long position when they feel that the stock price is going to increase based on their own analysis. Remember, we talked about this a while back too, going with the analysts or making your own decisions. So if you believe the stock is going to increase, a long is equivalent to basically a buy position. In this diagram, you see that a long position bets on the appreciation of the stock. You think or you hope that the stock will go up based on your analysis. Now, a short position is when an investor has purchased a given stock and plans to sell it at a later time. So this means the investor has purchased a given stock and it's the selling of a security with the intention to purchase it back when it's a lower price. And we'll explain this a little bit better with that another chart. So it's essentially the opposite of a long position. An investor would like to take a long position when they feel the stock price is going, a short position when they feel the stock price is going to decrease. Short is equivalent, long is equivalent to buy position, but the given investor must purchase the shares later for the transaction to take place at a later time. So it's kind of, you're betting that the price will go down. So you're hoping to make money off of that downward movement. And so you actually have the ability to do this in Investor Tool. You'll notice whether you'll notice where it says buy or sell. You can also sell and short the stock if you believe it's not going to go up in the long term. So is a long position bullish or bearish? What about a short position? So if you haven't heard about it, bull market is basically looking at, it's an optimistic view of the market. You believe the markets are going up. A bear market is when you kind of like a depressed view of the market. So you believe prices are going down. So we can definitively say that in the beginning of COVID, we had a bear market because all the prices were going down, versus now, at least we hope, or people are optimistic of a bull market happening where prices are going to go back up and people can make some money in the stock market as well. So now I'll hand it off to Nishal.
So trading and investing both involve seeking profit in the stock market, but the way it is pursued is different. So traders would jump in and out of stocks within weeks, days, or even minutes with the aim of short-term profits. And they tend to focus on a company's short-term factors rather than a company's long-term prospects. So on the other hand, investors have a longer-term outlook. So they would think in terms of years and often hold stocks through the market's up and downs. So here, this is a quote by Benjamin Graham, and he's the father of value investing. And he states, in the short term, the market is a voting machine, but in the long run, it's a weighing machine. And this quote basically explains the difference in nature between short-term trading and long-term investing. So here, this chart basically talks about the differences between investing and trading. And here, so when you come down to the type of analysis, fundamental analysis is basically, they're more concerned with the difference between a stock's value and the price at which it is trading. And technical analysis is concerned with price action, which gives clue as to the stock supply and demand dynamics, which is what ultimately determines the stock price. So technical analysis is concerned with price and volume data alone. And then when you come to the difference between profit methodology for investing and trading, it's price appreciation and then dividends and airdrops. And airdrops is basically the delivery of a cryptocurrency to a certain group of investors. And for trading, it's price appreciation, hard forks, and airdrops. And hard forks are, it's when developers of a digital currency essentially create a second branch of that currency using the same basic code. And For the other differences, for risk profile, for investing, it's cautious. And for trading, you take more risk because you move a lot. And for trade frequency, investing, it's rarely because you buy or sell and then you hold on to it. And then for trading, it's pretty frequently. And the investment period for investing is long term, and for trading, it's short term. So for fundamental values, you have the debt to equity ratio, the price to earnings, the earnings per share, the financial leverage, the DuPont analysis, and that's basically used to evaluate the component parts of a company's returns on equity. And this allows an investor to determine what financial activities are contributing the most to the changes in ROE, and we have return on equity. And you guys don't necessarily have to worry too much about the specifics of each, but just know that these are a type of metrics that investors can use to analyze long-term fundamental values of a particular stock. And then here we have technical values, and they are profit and losses, borrow, want, volatility, noise, which is basically, it refers to information or activity that confuses or misrepresents genuine underlying trends. So these can include small price movements and corrections, which distort the overall trend. And we have price, and like I said in the previous slide, you guys don't have to worry too much about the specifics of each, but just know that these are a type of metrics that traders can use to quickly evaluate stocks for immediate trades. And here, we just have a table of the differences between investing and trading. And basically, this slide sums it all up. So investing is longer term and slower growth. It's much less sensitive to short-term fluctuations, and it's more concerned with market and a company's fundamental values. And a great example is Warren Buffett. And trading, it's shorter term and frequent buying, and it's very sensitive to short-term fluctuations. It's more concerned with technical analysis. And example is Jesse Livermore. So the investor of the week is Tejas. He has a capital of 1.46 million with a profit of 4.51%.
Nice.
And if you guys want to become an outreach associate, feel free to scan the QR code and apply.
Yeah. And then also, as we have the our Instagram links, as y'all know, you can reach out to us on Remind or Instagram. But also one more thing we want to talk about is with the AI Club. I know last time we explained this, it was a little confusing, I guess. So we made it really simple to 3 steps actually. So if you scan this QR code, what you'll enter is an Excel sheet, and all you need to do is you find your favorite companies. Say for example, it's Microsoft or Apple or whatever. You just Google them up and you say, for example, Tesla stock. And if you do that, you'll get their ticker price, right? The ticker number, MSFT or AAPL for Apple, and you just put that in the Excel sheet. So before we try to ask people to fill out a lot more information, right now what the AI Club is looking for is for which stocks we're most interested in to see these predictions on. So if you're interested in doing that, we'd love to have you help out. So just take a minute and scan this QR code and write in your favorite stock that you're interested in looking at, getting some AI analysis on. And we wish Tejas' AI Club the best of luck in doing this as well. And it's a great opportunity to be a part of. If nothing else, this is the end of the meeting. Thank you all for coming. I know we are small in number today, but that's all right. Thank you for sticking through, and tell your friends to continue, tell more of them, because we get emails each week to come to the club. So we're so glad to have you all. Anyway, have a great week, y'all, and we will see y'all at the next meeting.